Hello everyone, welcome to the free video. Today I'm going to be talking about canaries in the coal mine. Canaries in the coal mine are going to be the stocks that roll over and die the quickest. This is especially important after there's been a little bit of a market rally. The S&P was up 1.87% today. Had a little bit of a move, however, after hours S&P futures are showing they're now down almost 1%, so it's been pretty volatile, and I don't think the volatility is going anywhere anytime soon. But when you're looking at different opportunities, it's really important that when you're trying to short, you try to short the weakest links, because what can happen is that if you try to go after, let's say, Apple to the short side, well, you're going to have a day where it's up 4% and going against you. Now, that's not to say that these names, maybe that wouldn't happen, because it absolutely could. And I mean, Roku, Zoom, any of these names could be up in a short squeeze, but well, that's kind of what you're dealing with when you're trading to the downside. When you're trading to the upside in a bull market, you always have the potential for a pullback. When you're trading to the downside in a bear market, you always have the potential of a short squeeze rip in your face. So risk accordingly. Anyways, now that I got you excited about that, ARK is the #1 spot that I have been focusing on as far as shorting to the downside, and this is just because it's literally like one of the absolute worst performing ETFs out there. Sure, Kathy Wood may be right in 5 years if she still has any money and believers left, but right now, this is absolutely one of the weakest places in the market. And you can see right here on these numbers, this is telling you, basically what percentage it's at in relation to the all-time high. So essentially, ARK was at $159 a share. And at this juncture, it's down some 68% from all-time highs, which is just crazy. So when you're looking for something to short, I personally like to look in this space, especially because over the course of the past couple days, we have seen a couple different rallies in these names. So this is the Phoenix Finder, and this is going to compare stocks that are similar on the same grid. It really just helps you do your research a lot quicker, and it helps you visualize things in one spot. So looking at some of these top ARK names, anything with red is going to be still in a confirmed downtrend. Anything with yellow is shifting to the upside, and anything with yellow and then green is showing that, it's shifting to the upside in a more substantial way. So that leads me to look for a couple different tickers where I can short the rip. Now, Shopify, Beyond Meat, TWLO, Zoom, actually that one just had earnings, and Tesla are all still in confirmed downtrends. But you can see that Spotify, DKNG, Roblox, and Zillow have all shifted higher. So that means that they're starting to at least rip a little bit where I could get in. Now, Roku shifted higher and already started dropping again, which means I missed it ever so slightly, but I could still get in. So let's just start off with Roku. Roku's definitely in a downtrend. I've shorted this one a couple different times this year. But a good spot to short it is typically when it rallies a bit, because you can get a better entry spot. Now, looking at the current move, it rallied up into about the $100 price point, and it has since already started falling. So at this juncture, I would look for the next target to the downside, which would be a retest of the lows, so right around 75, and then after that down to 65.70. So definitely think that one's shortable here. Let's look at Spotify. Spotify looks like it's trying to climb higher. I would probably wait on this one until it started to roll again, just like Roku's doing. And the thing is you can do it one of two ways. You can do it like a Roku, where you don't want to get in where it looks like it might take off, and you can wait until it starts to roll. Of course, then you're going to miss a little bit of the move, but at least you're less likely to have it go directly in your face. With Spotify, this one hasn't started to roll yet, so you could either A, watch until it trades higher and then get in when it starts to roll, or B, you could just start shorting it now for when it does ideally eventually roll. The other one is going to be DKNG. Definitely got a pretty weak link here. This one has also rallied up into this key area of resistance. We don't have any setups on the lower time frame charts, but I mean, this thing's in a downtrend. It's been in the downtrend for a long time. For me, it just makes sense to follow this trend. If you go back and see, you know, here's where it rallied, here's where it rallied, here's where it rallied, here's where it rallied, every time it's fallen. So, you know, you're basically just following the trend. Another one that I like to the downside is Roblox. Now, I did short this one right before earnings, and it has gone in my face for about 2 weeks, but now at this juncture, it's starting to go in my direction, which is the right way, which is lower along with the trend. And I do think that this one can eventually fall back down to 20 bucks a share. And right now, I mean, it's on the way lower. Then you have Zillow. I mean, that's in a downtrend. It's rallied right into this key area of resistance. And the next target to the downside would be 31. So out of all those, I think there's a lot of setups there. Zoom is another one that I did short today. That was right in front of earnings. It is going slightly against me after hours. Initially, I mean, it traded pretty high up to 108, but I mean, it's already started to fall. So we'll see what ends up happening with that one. But a lot of these tickers that have nice moves on earnings just roll right back over. It's a little too early to tell if this one will yet. But in any case, even if it does open up, you know, what, 95 to 100, that's just going to be right at a key area of resistance. And I mean, we're still in a massive downtrend. So that's one where I would definitely look at to short the potential rip. Anyways, you may think I'm being a little bit harsh about this ARK ETF, but I just think the entire thing's a total disaster. And, well, it's the canary in the coal mine. You could, of course, just short ARK yourself. I also heard there's some inverse ETFs that are doing that for you too. The next target to the downside would be 33. Other than that, that's about all I have for you. If you want to learn more about shorting the canaries in the coal mine, especially that tool that I just showed you, this is called the Phoenix Turbo. It's the Phoenix/Canary locator. You can join me at simplertrading.com/mine, M-I-N-E, as in coal mine, on Wednesday, May 25th at 7 o'clock Central. You can go to this page, sign up right here, put your own email address in, and I will be seeing you on Wednesday for my favorite tips and tricks about how to trade this bear market. I hope you have a great rest of your evening, and I will see you in the next one.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.